Hey everyone, welcome back to my channel. In this video, we're going to be going over liquidity. Liquidity is such a huge topic, so I want to break it down into multiple videos. In this specific video, guys, we're going to be going over the foundations, how to use them, what it is. And for bonus, we're going to be talking about equal highs and lows. And I'm going to keep it super simple for you guys, of course. So with that being said, guys, let's get straight into this video. When I first learned about liquidity, I thought it was a game changer, and it really is, guys. It can help you with entry confirmations, and it can also help you get the best entries possible. And it's all due to movement in the market and market flow. When I say the word liquidity, guys, I want you guys to think about orders in the market. And you can also think about it as the market needing more strength to do a reaction or a movement. And the reason why I like to look at it like this is because let's just say, I'm gonna, draw something, okay? We have a support and we have a resistance level, okay? Support meaning floor, resistance meaning ceiling, okay? When price, let's just say we're at a support, if price does not have enough strength to continue pushing up, what is it going to do, guys? It is going to reverse, it's going to collect orders, aka liquidity, to then be able to fly up to do the reaction or the movement it wants to do. So think about, price does not have enough strength. The market does not have enough strength to do the reaction or the movement it wants to. So it has to collect orders. It has to take people out of the market in the form of liquidity to then reverse into the opposite direction to fly up. So this can be really powerful as entry confirmations and to increase your confidence to actually be like, okay, price is respecting here, took liquidity out. I'm confident that price is going to reverse in the opposite direction and I can, then place a trade or whatever. Okay. So liquidity is such a game changer. So I want you guys to understand equal highs and lows. The reason why equal highs and lows are so important is because they can actually help you anticipate if price is going to reverse, take liquidity out or not. And I'll show you why. Okay. So let's just say we are at the support level here. Okay. So we're maybe wanting to enter in for buys up until this resistance level. Okay. Okay. We are here. There's candlesticks here. We're here. Okay. We make this. Okay. And pay attention to how I'm drawing structure, guys. Pay attention to this. Okay. Kind of here. Okay. Here. Okay. Here. Okay. And let's just say we end it off here. Okay. The reason why I drew it like this, guys, is because in a buy, we want price to break high points, right? We want it to break high points. Okay. If price is not breaking high points, the only other option for price to do is reverse. There's only two things you can do, buy and sell. So if price isn't buying, it's going to sell, right? And so if price isn't breaking a previous high, what does that really indicate to us? That this low may be weak. So when it comes to buys, guys, I want you guys to think about lows, okay? Pay attention to lows for buys because this is so important for liquidity, okay? So we're here, okay? Pay attention to lows for buys because if price is failing to break a previous high or aka a high point, guys, it may take this low out to get the strength, like I told you in the beginning, to then do what? Fly into the opposite direction. So it could look something like this, guys. We're here, come down here, okay? We don't have enough strength to push past this high, so what are we gonna do? Boom. And if it holds after price takes this low out, this low here, what is it going to do, guys? It's now going to have that strength to push past this high and break past this high to then fly into the opposite direction doing this. So what is it really doing, guys? When we look at this liquidity, okay, I want to draw this dot here. I'm going to just mark it so you guys know. If you ever see this on my chart, the dollar sign means liquidity for me. Okay, guys. So when we are looking at this support zone, okay, we did not have enough strength to break past this previous high. When we don't have enough strength to break past a previous high, this low is now considered weak. And if this low is considered weak, price can potentially take it out and use it as liquidity. And so you really want to pay attention to lows for buys, okay? Lows for buys, you want to pay attention because price can use this as liquidity. And this is what the banks and these institutions want these retail traders to do. They anticipate that these retail traders, or these, I don't like saying the word retail. I don't know why, but because am I technically a retail trader? Sure, but I think I'm more than that, but whatever. But okay, so what the banks and these institutions kind of think, they're like, okay, we know that retail traders usually draw their zones, supply and demand, whatever, support and resistance, whatever. They draw some type of zone, and they'll usually, have their stop loss, maybe just slightly below their zone, right? And they know this. They know this because they've seen it multiple times in history, in the past, right? And because they know this, what they do is they actually will take these lows out for buys or highs out for sells. They'll take these lows out because now they're thinking, okay, if we take these lows out, we're going to take a bunch of people out of the market. And when we take a bunch of people out of the market, what can we do now? We'll have the strength to push into the opposite direction because now we have a bunch of orders, a bunch of liquidity being pulled up, I guess you could say, okay? So that being said, guys, I want to show you a sell example and then we'll move on to the next topic. So for a sell example, guys, let's just say we're at a resistance level, resistance meaning ceiling, okay? So we're going to be making structure like this, okay? Structure like this, okay, this, okay? This is literally the opposite of what I showed you for buys, guys, okay? In sells, guys, you are paying attention to high points, okay? I want to write that down. Pay attention to highs for sells because this can be used as liquidity. In a sell market, in a bearish market, we want lows to be broken. And when price fails to break a previous low, guys, the only option for price to do is reverse into the opposite direction. It doesn't have to be like a huge reverse, but it's going to correct because it doesn't have enough strength to break past this low point. And we need lows to be broken in a sell market. So what is price going to do, guys? It is going to collect orders. And what did I tell you that, liquidity is defined as? Orders in the market, right? Is going to fake people out thinking it's, buying when instead it's collecting people, it's collecting orders. It's taking people out of the market to reverse into the opposite direction to sell down. Similar to how I drew the buy structure, guys. For sell structure, this high is now considered weak, okay? You guys in the buy example that, the low point was weak because it was failing to break a previous high. This high point is weak is because it's failing to break a previous low. And because it's failing to break a previous low, guys, what's going to happen is something like this, okay? We're here, tap into this level. We're failing to break this low point. We're failing to break structure. We need to break lows for sells. So what is price going to do if we're failing to break this? It only has one other option, to go back up, right? And if it goes back up and takes this high out and holds, guys, it is liquidity. That's why I told you guys to pay attention to high points in a sell market, okay? So this is going to be the liquidity sweep, right? Liquidity grab, liquidity sweep. It's the same thing. It's basically saying liquidity was taken out. Price took orders, price collected orders. Price failed to break this previous low. It does not have enough strength. If it does not have enough strength, what is the price going to do? Reverse. If price reverses and it holds after it reverses to correct, taking this high out, what is price going to do? That means that most likely that is liquidity and price is going to fly down and sell, okay? That is basically how liquidity works. So that is why understanding if price is breaking a point or not is so important, because it can actually help you kind of think about, okay, price may, take liquidity out. Let me keep that in mind so I can get the best entry possible. For sells, you want to pay attention to highs because price could use that high as liquidity. It could sweep it to then reverse. For buys, you want to pay attention to lows because price can take that low out to reverse into the opposite direction, okay? Pay attention to lows and highs because they may be considered weak. If price is failing to break a previous low or high point, it might be weak. So you want to be careful and pay attention to that. Sometimes liquidity will not always be taken out. Like this high may not always be swept. And what price sometimes does is it will stay below a previous high, or it will stay above a previous low for buys. Failing to break this point, okay? It comes back, it comes close to this high point, but it doesn't take liquidity out, and then it sells down. And I like to think about this as my power 4. So 4 options that can happen at a zone, okay? I'm gonna write them down. Please think about these things when I am looking at a zone or a POI, okay? That being said, guys, okay? Number 1, I told you guys, the first example I showed you guys was price failing to break a previous low, and lows need to be broken in a sell market, in a bearish market. So if price does not break a previous low, okay, 4 options that could happen. And again, guys, this applies for buys as well. It's just going to be flipped. Price can easily just break this low point and just sell down, right? That's option 1. Okay, price may not have enough strength to, you know, push down yet. So what is it going to do? It's going to retrace, but it stays below this previous high. Okay, and because it holds after staying below this previous high, guys, what is it going to do? It's going to sell down. Okay, number 3, okay, price failed to break this previous low. Okay, we know price is going to do some type of retracement. Okay, and this retracement this time takes liquidity out. Okay, and because it held after taking this high out, it's now considered liquidity, and price is going to sell down. And lastly, number 4, price may not have enough strength to push down, and sellers might not be in control yet. So price may just hold at this low point here to then just continue in the uptrend direction. Okay, so again, guys, it's going to be opposite for buys. Okay, so up until now, guys, you guys understand that liquidity is orders in the market, or it's price needing more strength to do a movement or a reaction. Okay, you guys know that you want to pay attention to lows for buys and highs for sells. The reason why you're paying attention to lows is because price can use that low as liquidity by sweeping it, by taking it out, collecting orders, taking people out of the market to fly in the opposite direction for buys, right? And sells, you're paying attention to highs, because price could do what? It could, you know, take that high out, it could hold, collect orders, take people out of the market to then have the strength to finally reverse and sell down. Equal highs and lows is just a liquidity type. Some people like to call this as an M pattern or a W pattern. And the reason why is because it literally looks like a W and an M, okay? Because in order to make equal highs, it has to look like this, right? In order to make equal lows, it has to look like this. Okay? Remember, the equal highs and lows do not have to be perfect. Like, you don't want to strive for perfection. The markets are not always going to be perfect, okay? So as long as you get something similar to this, you are going to be fine. When you see price looking like this, guys, most likely price is going to want to sweep liquidity, aka take these highs out, okay? Or this low. So I'm just going to draw that, mark that up, okay? This is the first liquidity type that we're talking about. In my next video, we are going to be talking about other types. So I want to talk about this one first, because this one is actually probably the easiest one to understand and just makes the most sense, okay? It's basically the banks and institutions knowing, again, remember in the beginning, I was like, they know that, you know, retail traders, they have their zones probably here. Why? Because if you guys understand support and resistance, or just drawing zones, they know that people are going to be like, okay, there's multiple reactions here. Let me mark a zone here. And because they know this, they know that most likely that and because they know this, they know that most likely if retail traders were going to enter, they would have their stop loss like maybe here, and then they would want to enter in for a sell, right? But because they know this, they use this to their advantage by taking people out. So they take people out because now it's going to hit their stop loss, right? They're going to hit their stop loss. Most likely it's going to collect orders now to then reverse. And this is why equal highs and lows can be really beneficial. Okay. That being said, guys, whenever you see equal highs and lows, and I don't want to say whenever, because, you know, obviously you want to react to what you see, but also, like, you know, there's other parts that play a role in it, right? But usually when you see equal highs and lows, price at some point At some point is the key word. Not like, you know, right away. Like, you know, like let the market, you know, do its thing. Okay. At some point, price is going to take these orders out. It's going to take liquidity out. Okay. So that being said, guys, if price is going to take these highs out, and if price is going to take these lows out, what are we really kind of paying attention to? We're going to think about that. We're going to think about it like this. Eventually, price is going to come here, take these orders out, okay? Fake everyone thinking it's going to, you know, go into the opposite direction. So it's going to buy, okay? But in reality, it's just taking these people out, okay? And when it takes people out and it holds here, it then does what? Sell back down, because it has what? Enough strength to do what? The movement. And that is what liquidity is. That is how I explained it in the beginning. Take these equal lows out, okay? Hold, and then reverse into the opposite direction, okay? So you can actually use this to your advantage, guys, okay? So let's just say you're at support zone in this example. You're at a resistance zone in this example, okay? I just want to delete this. Okay? So instead, okay, you see this here, and this is your POI right now, okay? Price is down here, okay? For this example, price is up here, okay? Let's just say, okay? For equal highs first, okay? Guys, when you are here, let's just say these candles here, and let's just say you're at this support zone, okay? You see these equal highs at this resistance zone. Like, let's just say you just happen to draw, you know, a resistance zone, or you look left and you see equal highs being presented. The reason why this is so essential to actually pay attention to, because knowing that price is going to most likely take these equal highs out can actually help you with what? Your take profits. You hear that? Your take profits. If you know that there's liquidity that needs to be taken out here, because the banks and institutions, like I said, they're smart. They know people, you know, most likely are going to sell at resistance, and they're going to have their stop loss like really close to that zone. They're going to do what? Take them out. So what are you kind of paying attention to? You're paying attention to these equal highs, because it could potentially be a take profit level. That being said, let's just say you're wanting to enter for buy. Okay, you can TP this level. You can TP slightly above it, knowing that price could, you know, take these equal highs out to then, you know, be like this. Okay, beautiful. So let's just say, just for, you know, just so you guys can have visual, because you guys know I'm very visual. Okay, let's just say, okay, beautiful. Basically something like this. Okay, so they can help you with take profit levels, because you know these equal highs need to be taken out. Same thing for sells. Okay, so let's just say, where's my thing? We're at this resistance level. Okay, we want to enter in for, you know, sells. We see these equal lows here. What are we thinking about? These lows need to be taken out. Price wants to take these orders out. Okay, and price could, you know, sometimes price might just, you know, continue selling down, but if you know it's going to be taking these lows out, your take profit is literally going to be right here. And I don't want to tell you guys that this is going to happen every single time, but you're going to notice that this actually happens pretty often. Okay, so you can have it slightly here. Okay, and then we're going to have it like this. Okay, and okay, so something like this. Beautiful. So you can then target these equal lows, because what? You know they need to be taken out. Okay, so that is equal highs and lows in my little animations drawings. Now I want to show you guys real examples with candles. Okay, so let's just say we are at a support zone, and remember I told you guys to pay attention to lows for buys. And the reason why we're thinking about buys right now is because what? We usually buy at support. Okay, so that being said, guys, remember I also told you guys to pay attention to weak highs and lows. And this is because what? The price could possibly use it as liquidity. It can take orders out to then fly into the opposite direction. And the reason why we want to pay attention to this low in particular is because we are kind of thinking about entering in for a buy if price taps into this level down here, right? Okay, that being said, guys, if we want to enter in for a buy, we know what needs to happen. high points need to be broken. Okay, so I want to draw this level here because this is the next high point that we're really looking at, but you can see price is clearly super close to it, right? So if we know that for buys, high points need to be broken, and price is failing to break a previous high, what did I tell you guys price could possibly do? Reverse into the opposite direction. And I also want you guys to think about my 4 option rule, the power fours, those power fours, right? Remember those 4 options, because I told you guys not every time price might not take this low out. It might stay slightly above it to then, reverse into the opposite direction. So just pay attention to that, okay? So if price is failing to break this previous high, price is going to, most likely come back down. And this is the next level that we're now paying attention to, because this could be used as liquidity. So we're paying attention here. So let's just watch this reaction. Let's wait for the reactions. Let's wait. Okay. We're at this level here. Let's see if we break it. Okay. We're here. We're failing to break. And because we're failing to break, guys, what are we now thinking? Price does not have enough strength to push past this level to continue pushing up for buys. So what is the only option that price is going to do? It's going to retrace. It has to. It's going to try and collect orders, take people out. It's going to do whatever it takes, basically, to see if it can have the strength to reverse into the opposite direction, okay? That being said, guys, we are paying attention to the slow. We're paying attention to reactions. And when you pair this with your other entry confirmations, like, okay, let's just say price comes down here. I wait for, 2 candlesticks, or, then a break and a retest on the lower time frame, like 3 minute, 1 minute, whatever. Okay, you have this, okay, price is approaching this zone really, really strong, okay? To me, this is pretty strong. This is a very strong candle. That being said, what am I paying attention to? I am really paying attention to this low. I now want to see what we're going to do with this low, okay? So you're going to wait, you're going to wait, you're going to wait. Beautiful, okay? Continue, okay? What am I paying attention to? I want high points to be broken. So as long as we stay below this high point here, I know price is going to go lower, right? Okay? Sometimes when price starts taking lows out, right? What I like to pay attention to is I like to pay attention at the looking left, okay? Because it might not be a liquidity sweep. Price might just have enough strength to just continue selling down, and it might just be creating self-structure. Because what did I also tell you guys? Those 4 options. And one of those 4 options was price could continue just pushing down, right? So that being said, let's continue watching this. Okay, let's continue. This is where you start getting your entry confirmations. This is where you want to confirm that it is truly a liquidity sweep. So what you can do actually is you can drop down to the lower time frame. Okay, we're on the 15 minute, so you can go onto the 5 minute, and you can actually wait for a break of structure of a high point. Okay, because if you're thinking about getting in for buys and you want extra confirmation that it's truly price taking this low out and holding, just mark a high point, wait for a break of structure of that high point, get in on the retest, okay? If you want extra confirmations, okay? Usually I will, after price, takes the low out, I will wait for another candle already just to make sure price truly wants to hold. Because if price truly doesn't want to hold, then we're no longer looking here. We're looking where? At the next level, okay? That being said, let's play on the next candle. Okay, we come here pretty strong. This is technically a break of structure now. Why? Because this is more body than wick, okay? So you can wait for the next candle, okay? And now you can classify this as what, guys? A liquidity sweep, okay? And you're probably like, wait, didn't you just say that liquidity sweeps are usually in the form of wicks and candle bodies? And usually they are, okay? Usually they are, okay? But sometimes when price takes this low out and I see that it holds after taking this low out, I just already assume that it's liquidity sweep. But I usually personally like to look for wicks as those liquidity sweeps. But when I see something like this, I just see it as price, instead of price tapping into this POI here, it tapped into this POI down here, okay? So it's taking this low out, it held, and price can potentially reverse into the opposite direction, okay? We can wait for a break of structure of this level here, and then we can place an entry based off our confirmations to then, get in for a buy and hopefully now have the strength to do what? Push past this high, because it couldn't earlier, because now it did what? It collected orders down here. It took this low out. It took this low out and it held. And because it took this low out and it held, we can then enter in for most likely a buy based off our confirmations and entry criteria. So we can play this out and see. Beautiful. Oh my God. TP didn't even hit yet, but listen, it's going to. Oh my God. Guys, this is art. This is art. Oh my gosh. But do you guys see why when price is approaching my low, I will look left to draw a point here just to make sure that price truly wants to hold? So yes, I like to look for liquidity sweeps as wicks, but also if price holds, but if price, keeps pushing down a little bit, I'll just look left. If it holds at the next level and then it breaks some type of high point for buy structure, and then price retests and then holds, I'm getting in. Okay, this can be considered as a liquidity sweep. Again, you can look at them. You can look for wicks. You can look for bodies. Regardless of what you look for, just know if lows are taken out and it literally holds like it did here, and then you find an entry confirmation like a break of a high point, okay, then you are good. Okay, this is now considered a liquidity sweep because what? Price collected orders. It took these lows out to then reverse into the opposite direction, faking people out, thinking price was going to sell. Because if you think about this, remember support and resistance. Remember, price. This is currently a support here, and price breaks here. And retail traders or people who are not as experienced, they might think that, okay, this is now a resistance level because we broke this support, and now this support is now considered a resistance level. And what do we usually do at a resistance level? We sell. So they're anticipating that people think like that, and they will enter in for a sell. But in reality, price is just taking lows out to reverse into the opposite direction. So pay attention to this, okay? Pay attention to this. This was a beautiful example. So you're gonna see this often, okay? So I know you guys are probably questioning, okay, can I find them on the 4-hour, the daily, the weekly, the 2-hour? You can find them on any time frame. Realistically, I know some people who find them on the 4-hour, whatever. I usually like to get all my markings on, and then I like to find them on the lower time frame, like the 15-minute, the 30-minute, or even the 5-minute. Because realistically, these are great entry confirmations. When you see a liquidity sweep and you see price holding and respecting, it usually can anticipate and help you be like, okay, I now have that confidence to enter in for a buy. And because I get my entry confirmations off the lower time frame, it would make more sense for me to find a liquidity sweep on the lower time frame as part of my entry criteria to get into the trade. So if you're wondering, I look for them on the 15-minute, usually even the 5-minute, okay? Even the 3-minute, even the 1-minute. Lower time frames are usually where I find them, okay? You can use a higher time frame. You can back test and try it with the higher time frame, whatever you prefer, guys, okay? That being said, I want to show you guys a sell example, okay? So let's just say we're thinking about entering for a sell, okay? We're at this level of resistance, your POI, whatever you want to call it. We're at a zone, okay? In the sell market, we want what? Lows to be broken. So what am I paying attention to, guys? Similar to how I drew it in the beginning, okay? I want low points to be broken. So the next low that I'm looking at is something like this. And if you want to even look at another low, you can look at this. If you saw this one, that's okay. You saw this low, okay? Beautiful. We want lows to be broken, okay? That being said, if we are failing to break a low point, what did I tell you guys? Price may not have enough strength to push down yet, and what is price going to do? It may take out a previous high, okay? So this is why you want to pay attention to high points. Pay attention to high points for sells, okay? Period. So you want... Sorry, guys. Okay, pay attention to high points for sells, okay? That being said, I want to mark this, as a dot so you guys can pay attention to it, okay? We're paying attention to this high point. You can pay attention to these highs if you want, whatever you prefer. Honestly, I'm just going to pay attention to this one because it's more close to current price and current price dotted line, okay? You want to wait for price to break this low point, okay? Let's just say we're going to TP down here. I'm just going to put this as a take profit levels just so we can have one, okay? That being said, we're waiting for a low point to be broken because we want price to break low points for sells, okay? We're waiting for the reactions. We're waiting, okay? You guys can see. What do you see? Their lows are not being broken. Price is failing to break this level here. And you can think about my 4 options. I hope you guys wrote those down, please. I really hope you did because you're going to see them a lot, like a lot. I think about them every single time I trade. every single time. Anyways, because we are failing to break this low, what are we now paying attention to, guys? We are paying attention to this high because what could it do? It could use it as liquidity. Continue, let's see what happens, okay? Still failing to break. Ooh, y'all see that candle? And because this is bar replay, I don't know if the candle actually looks like that. Let me just wait. Okay. Okay, let me wait. Okay, now we can start getting confirmations. We can go on to the lower time frame, like lower than the 15, find a low point to be broken, enter in on a break and retest. Realistically, that's how I go about it. Okay, so let's just continue. Let's make sure that this is truly price trying to take orders to sell down instead of price, reversing to the opposite direction. Continuing buying. Sorry. Okay, so let's wait. Let's just wait. I'm just gonna play a little faster because yeah. Okay, beautiful. Okay, we can see, guys, what do you see? Price took this high out. What you see? A lot of wicks. You see some bodies. That's okay, but it's taking this high out. It broke a low point on the lower time frame. Let's just say it's literally taking orders out. So it's literally taking orders out. It's faking people out, thinking price is going to continue buying, because what do most people think? Oh, price broke structure. No, price did not break structure. It's taking you out, bro. It's taking you out, okay? And because it's taking you out, guys, and it's holding, you can find an entry confirmation and just enter in for the sell. And as long as price continues breaking low points, guys, price most likely will hit your take profit level. Okay, guys? So that is literally liquidity. That's how it works. So pay attention to those highs for sells. Pay attention to those lows for buys. If you can pay attention to them, and if you can pay attention to those 4 reactions that I told you that usually happens, woo, you're going to be killing it. You're going to be incredible, okay? Incredible. And you can see, guys, lows are being broken. Boom. I don't know why I didn't draw a horizontal ray. Let me redo that, sorry. That boom. Boom. Okay, there we go. Boom. And because this one respected, we can anticipate price is going to do what? Hit that TP. So we're going to go over equal highs and lows, aka the W pattern or the M pattern, okay? Remember I told you guys that equal highs and lows can help you with TPs? It's because we know that most likely that price is going to want to take these equal highs and lows out, right? In this example, this equal low. If price wants to take this equal low out, we can look left, find a point slightly below them. Okay, this is the next point, and we can TP here. If you're more experienced, you might already know price is going to go lower. You might TP here. Doesn't matter. Okay, so let's just say you were at this resistance zone. You're entering for a sell. You see these lows here. You see these equal lows. And because you see these equal lows, guys, price is going to have to take them out at some point, okay? So you can actually, do the same thing that we did in the previous sell example, pay attention to the high points, blah, blah, blah. And then, anticipate, okay, there's equal lows here. Price is most likely going to take these equal lows here because they know that there's orders here. There's orders here. People have their stop losses here. They know this because what? Realistically, when people draw their support and resistance zones, they know, like, okay, there's a touch here, there's a touch here. Okay, if price comes down here, I'm gonna enter for a buy. And what price? No, price is gonna take you out most likely. Okay, so just pay attention to them. That's literally wow. Oh my gosh, you see that, guys? That yes. Okay, so that's a great TP point that you guys can think about at an equal high and low. You can anticipate that price may take orders out, right? So if you have these equal highs and lows, okay, price is going to most likely take these out. You can then anticipate price is going to take this high out to then reverse into the opposite direction because it's an equal high. Okay, also remember, you're paying attention to low points being broken if you are entering for a sell, and you're paying attention to this high point here because this is the high point that can possibly be used as liquidity. And remember, guys, equal highs and lows, they're not going to be perfect. Sometimes this one is actually pretty perfect. I ain't gonna lie. It's actually pretty, yeah. But you can see, you draw them at the wicks, guys. So I want you guys to don't draw them here. Always draw them at the wicks, okay? So draw the line at the wick, a trend line, whatever you prefer, at the wick. You can draw this purple dot if you want, or whatever, a dot if you want to think about it. You'll usually see this on my chart as well because it helps me, you know, pay attention to it. Okay, that being said, we can, let's just say we want a TP here. Okay, we have these equal highs here. We know that price may potentially use this as liquidity, so we're paying attention, seeing if low points are being broken. Low points are not being broken. Okay, let's see if this if price retraces to then take this high out, these equal highs out, to then reverse into the opposite direction for sells down. Okay, so gonna be something like this. Ooh, a 1 to 4. Let's see that. Okay, so basically this is how it's gonna look, right? It's gonna take, you know, those equals, it's gonna take those equal highs out, and then it's gonna reverse into the opposite direction if it holds. That's the key word. If price holds. Do not, just because there's an equal high does not automatically mean price is just gonna respect it. It's gonna take it out and then respect. No, if it holds. So you want extra confirmations. That's why when price does take it out, I then look for extra confirmation on the lower time frame, like a break of a low point or something, like whatever my entry criteria is. Okay, some people might think this is a break of structure right here, okay, because you can see a candle body breaking a level here. Okay, but what's really important is you take liquidity as higher priority. Okay, and the reason why I say this is because you are at a resistance zone. Okay, I love to say you are selling at resistance until given buy confirmation. The reason why I say this is for literally because of this. Because if I'm already thinking, oh, this is a break of structure, let me buy. No, we're at a resistance level. We're already thinking about selling, okay? And the only way I'd be thinking about buying is if I get true break of structure of this point. So price actually fully breaks this level and maybe gives me some other reactions to then continue up. But I'm already thinking about selling until given buy confirmation. So I am waiting to see the reaction here. Okay, we took this high out here, beautiful. Okay, next candle with this level here, no break of structure here. Okay, let me drop onto the 5 minute or the 3 minute or the 1 minute. Okay, let me wait for a break of a low point here. Okay, price broke that low point here. Okay, let's find some type of retest entry and then boom, enter in for that trade. Beautiful, like this. Okay, so liquidity is always higher priority. 4 options that can happen. I told you guys in the beginning. If price doesn't break structure, break this point. So more body than wick, breaking a level. It is not a break of structure, and that is now probably considered as liquidity if price holds, guys. Okay, the institutions know that people have their stop losses in this area, so they're going to take people out to reverse into the opposite direction. So if I see these equal lows here, I'm going to kind of wait and think about, okay, we have these levels here. We have my POI. I'm potentially entering for buy here because we have the support zone. Okay, so I want to see if price takes these lows out and uses it as liquidity to then reverse into the opposite direction. Here, price failed to break this level here. Okay, this low is not as strong as we thought it would be. Okay, price is going to reverse. Okay, let's see if price takes it out as liquidity. It doesn't. It ends up, coming close. Okay, it engulfs this previous candle. Look for other entry confirmations and then boom, hit that position, guys. Hit that position. And that is how you guys can use equal highs and lows and just liquidity in general, guys. This was just the foundation and the beginning of liquidity, guys. When you start to pair this with other things, guys, you can see that it can be pretty powerful. Like, look at this. Just from understanding weak lows and highs, okay, equal highs and lows are going to be taken out, okay. Paying attention to lows and highs because those can be taken out. And then using that knowledge to then find entry confirmations based off your strategy or entry criteria. With that being said, guys, this is the end of this video. I hope you guys enjoyed this. Thank you guys so much for watching this video. If you enjoyed it, please like, comment, and subscribe. And I will see you guys in my next video. Bye, guys.